And I don't know if Steve Ferrara is going to join us today or not. If not, that's fine. Okay, looks like Steve Ferrara is going to join us today or not. If not, that's fine. Okay, if he joins, we'll cut him in here shortly. So, well, good afternoon, everybody. This is Dennis Wilborn with the Active Trend Traders. Just give you a little bit of an update. What's going on with the market? The market today, mixed parameters. That means it doesn't know which way it wants to go, up and or down. Something we would expect for going into a Labor Day weekend. Oftentimes, the institutional traders that are on Wall Street head out to the Hamptons for the afternoon trading. So we could see some volatility through the close today, but also we could just see things quiet down because remember, Monday is a holiday. So let's get on to the session. I'm going to hide my video so I don't get in the way of any of the stocks or any of the charts we're going to be doing. As I highlighted earlier, what's going on? Dow's trying to make a little bit of a comeback here. It is up to, back up positive 22, but the S&P, the NASDAQ composites, and the NASDAQ and the Russell are down for today so far. Good morning, this is Dennis, or good afternoon, this is Dennis Wilborn, the Active Trend Trader. Again, welcome to How to Make Money Trading Stocks weekly live stream. One of the things that I'm going to be doing with this particular stream, and again, give me some feedback on it. It will be basically very shorter, a little bit shorter than the normal process, because I'm going to be really focusing in on just the charts of the indexes. And then if Steve joins us, hopefully he'll have a stock for the week. And so I'm getting rid of all the superfluous stuff. The other thing that the challenge that my wife has given me is she said, Dennis, you gotta stop the technical talk. People don't know what a Fibonacci is, or a majority of people don't know what a Fibonacci is. And so I'm going, okay, I'll do that, Michelle. And so, Steve, welcome on board. I am making you a panelist. And where'd you go? There you go. And unmute you. Just give me a radio check to see, make sure we can hear you. Okay, Steve's probably just getting logged on. So, a little bit louder, please.
Let me see.
Yeah. I got you, Steve. Okay. Can everybody else hear Steve?
Hello, testing.
Yes, Steve, we got you.
Okay, thank you.
Can everybody else hear Steve? Very faint. Yeah, if you can get a little bit closer to the mic.
I have a wireless mic. Let me try. How about this? Is this better?
That's a lot better. Yeah, that's a lot better.
Okay.
You just got to sub. Okay, we'll be right back with you, Steve. I'm going to jump through the rest of the charts, and I hope you've got a good. I'm looking forward to whatever stock pick you have for today.
Well, I don't have a great pick, but something to keep an eye on.
Okay, and so let's get on with. Want to remind everybody that the materials we do present us for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. So as I said earlier, we have a mixed market. Are we setting ourselves up for what I'll just call the ugly September? Be aware that normally September is typically the worst performing month of the year historically. So sometimes Septembers can surprise us. As we saw last year, September went sideways. But then remember, the whole market fell out of bed in 2018 in the October timeframe, you know, dropped like a rock until just about, you know, the Christmas rally came the day after Christmas. And that's what loaded us to the upside very nicely. So I'll tell you, I'll basically just say, hey, hold your convictions and your market biases very loosely and hold your stops very tight. So you know, this is a perfect time to get whacked up in the market. We don't want that to happen. So let's get over here to what we want to look at. And so, so let's get to the charts. And it's going to feel a little bit strange for me also going through the charts the way I'm going, simply because I'm used to giving all kinds of other explanations and stuff and all that type of thing. And what I want to do, like I said, is just come back and say, hey, here is the basics of what we're looking at. I'm going to look at the SPY. I'll let the spiders take the place of the SPY. I'm going to be looking at the NASDAQ, the Qs for that, and then IWM to represent the Russell. What do we, almost all three of the indexes are kind of carrying on the same type of pattern right here. I'm not going to throw up any Fibonacci. As a matter of fact, you know, like some people have a swear jar on their desk. I am, and if they say a bad word, they put $1 in the jar. Well, I'm trying to make this a techno babble free zone, so that if somebody's coming in just to learn about the market a little bit, they can at least walk away with something of value to say, oh, I understand, you know, a little bit what Dennis is talking about. So that's good. What we see right now is we are range bound with our price action on the S&P. What does that mean? It basically means that price action is moving in this little box right here. In that little box. When prices get up to the end, as it moves in this little box, the case for the bulls is if price action breaks out of this box to the upside above this $295 level in the spiders, that would basically be an indication that a rally was going to have legs and continue up, especially if it goes above this level here, which is about $302. The case for the bears, we break out down the bottom of the box, take out this dotted line, which represents the 200-day moving average. And as you can see, that's 200 days of the average prices, and they take an average of that. And oftentimes these squiggly lines that we see there, they are various moving averages on various time frames, and they represent, they oftentimes will act as either support or resistance. And as you can see right now, when they turn into spaghetti like this and they're all, you know, bunched up, they really don't provide good support or resistance. And so what we'll have is kind of a whipsaw type effect when in a sideways market like this, where price action will whip down through these shorter term moving averages. That's the 8, the 20, and the 50, and rip back up through them and rip back down. And that's exactly what we're seeing here. Up, down, down. And if you're not careful, you're going to get whiplash from watching like that. It's also a time for many traders. They get eaten up in this area here because the standard way that they would normally trade in this kind of, you know, a market may be to trade pullbacks. Well, pullbacks aren't really working right now because we're in a sideways market. So my suggestion is simply wait for the pullbacks into this lower zone to the floor. That green zone is the floor between 280 up to about 283. That's where you could buy, and you sell when it gets back up in here. If you're going to do a leverage ETF for the SPY, that would work also. And get back up to the ceiling and then be ready to either if you enter down here, exit your position here until you get a breakout. And because you don't want to get whipped around. So that's the spiders, not a lot to write home about. There is a larger pattern that I'm watching, which is basically called a megaphone top. The top line reflects a level of resistance, the bottom line, a level of support. Right now, it appears as if we're trying to get going back into a little bit of a rally, maybe back up into the upside there. But if we close back below these moving averages or the middle of this big green candle right there, that would give us an indication that weakness is coming back into the market. QQQ, which represents the NASDAQ, something very similar. Where'd it go? There we go. It's blocked. You can basically just draw this right on your charts, guys. Little blocks there. There is a little bit of an upside bias to the bottoms there, so be aware of that. It's more or less a little triangle, but it is having the dickens breaking out the ceiling there, because it would like to break out the ceiling, go on up, bust out the roof, and go on up to higher levels. However, right now, there is not enough traction in the market to push it through those levels. There's too much indecision. There's too much news right now in the news-driven market that's driving things around, either up or down. And so that's what I'm seeing, Steve, is right now we're stuck in a range, and until we break out either the bottom of the range or the top of the range, we're not really going to go anywhere. The positives are we're above the 200-day moving average on both the NASDAQ and the S&P. And then lastly, IWM. The thing that's different about IWM, let me get rid of some of the, I won't get rid of that one. Get rid of this trend line. Remove that drawing. There we go. The price action on IWM is below its main moving average of the 50. This dotted line here is the 200. So price action is below that. And it is poised more so than any of the other, any of the other indexes to head down rather than up. As you can see, it has tested this floor over here on the weekly chart on the left. It's tested that floor several times. That floor of support goes all the way back here to October or to around February of last year. And right now it's holding, but it did break down just a little bit earlier this week. So that's what I'm seeing for the, I will throw one other thing on it. That's what I'm seeing for the indexes, Steve. Not a lot to write home about. Just keep an eye on this channel heading down. When price action is up towards the top of the channel, you can take a trade, if you know how to do it, take a trade to the downside or trade the inverse ETF, which is TZA. So, Steve, what great stock do you have for us, man?
Am I still unmuted? I can't.
You are, yeah, I'll call up.
Okay. Put up PAGS.
B?
PAGS. It's the number 2 stock in the IBD 50 this week.
BPGS?
No, PG. Now I've got a mental PG. It's the number 2 stock. Why am I?
Well, hold on a second.
Wait. Here it is. PAGS. PAGS.
Oh, PAGS. Okay.
PAGS.
Cool.
PAGS. Yeah. And I noticed that your list flashed out in front of me. It's your number 1 stock also.
That is correct. Let me get rid of this. Let me get rid of this stuff here.
Okay.
And somebody made a comment. I think thanks for the comment, Rocco, about that the fibs are so insightful. I will save, learning about the fibs for our premium members. But for right now, we're going to keep it nice and simple. So what you got, Steve?
Hey, PAGS, it's the number 2 stock on IBD 50. It's a trade that was not successful for me, but I think it's a great example of trade management.
Okay, hold on a second. I'm going to blow this up.
Yes, that'll be good. I did take a long position yesterday as we traded above the high of the prior day. I saw the prior day's action three bars ago.
Okay.
As a potential reversal. We had pulled back to the top of prior resistance, which is now support. So I thought it would be worth a nice exploratory trade. To my view, the market had started to stabilize and turn bullish.
Okay.
And PAGS had been showing relative strength to the market by holding up quite well during the month of August, and then we've had the pullback.
Yes.
So I decided to take a long position. It closed weak. So I entered just above the high of the bar 3 days ago.
Okay, right here.
Yeah, just above that high was my entry, but it closed weak back toward the ADMA. And I exited this morning when we breached yesterday's low. So the entry bar's low was breached, so I exited for a very small loss. But I think it's a stock to keep in mind. It's the number 2 stock in IBD 50. Has been showing relative strength, and I'm looking for a re-entry as soon as the appropriate setup occurs. And I'm looking, depending how it closes today, Monday maybe, Tuesday maybe a re-entry with what I call the Wilborn entry, your
Okay.
team. But it's something to keep an eye out for.
Yeah. So I don't want to, if I go Technobabble, I have to contribute $1 to the Technobabble jar.
Okay.
But I'm going to I am going to lay in there that, that level of support right there.
Absolutely.
That is based off, here was a past high.
Correct.
It broke out of that, and it's come back.
And it broke out into new high ground.
Exactly.
And it's pulled back right to that level. Yeah.
So
I'll expect it should hold, but we'll see.
We shall see. Yeah. And the market, like I said, the market is just absolutely, right now is just really kind of flaky. And it is just a mixed market.
Yeah.
So cool.
I agree with you. Although I'm an aggressive trader and I will take those setups when they occur, but I've got a tight leash and there's small losses if they don't work out.
Yeah, so I estimate that you got into this trade at about $50.50 or so.
What was the? I can't remember. What was the high?
The high from 2 days ago was $50.51.
So 10 cents higher, 61.
61, and then if you got out
I got out 10 cents below to the yesterday's low.
And so yesterday's low was 50.27, so you got a 50.17. So that's excellent trade management, and I hope everybody sees that. That's excellent trade management in that you kept your loss small. The market is kind of crazy, just waiting for the next tweet from President Trump, or and news driven. So what does PAGS do?
I don't know. I'm not much of a fundamentalist. Fundamental analysis, much like yourself.
Okay.
My reason for that pick was it's the number 2 stock on the IBD 50, and it had set up appropriately. I must say there was one negative regarding the setup. Is that reversal bar 3 days ago occurred on very low volume.
Yeah.
So it's not typically a classic reversal bar. But I like the fact that since for about the last 2 weeks, we've been under average volume. That's ideal for IBD stocks for entry positions. Gilbert Alice used to trade, was the lead trader for Bill O'Neill, calls this voodoo volume, very low volume on a very fundamentally sound, strong stock.
Yeah. And this still looks really good. And what Steve's talking about is right here on this day, which was that breakout day, you got huge buying volume.
Correct.
And then as it digests that, it's just kind of moving sideways like this. The volume is drying up. And so we'll see if it recoils and gets ready to launch. So there's an idea for your trading if you're looking at going into next week. So, Steve, I'm going to get on to the rest of the session. Thank you so much, my friend.
Very well. Thank you, Dennis.
And so let's see. Let's go back over to the. Here we go. And yeah, here's what Steve was talking about. PAGs actually. I basically do a research on over 500 stocks that are put out by IBD in their 13 premium watch list. One of the watch lists. I gotta take care of something here. And so as you can see, PAGs actually had the power factor of 6 and a power ranking of number 1 from last week. And this is part of the information I provide even to our free active trend trading members. Here's where we're sitting going into the end of the day, or about 9 o'clock this morning, 9:30. I'll be straight up with you. I was really disappointed with Tesla taking off like a rocket ship today, and it banged me up on one of my trades. But it's still the loss was still less than 2% of the portfolio, which is, from what I understand, that's the way you're supposed to do it. No, I'm only kidding. That is the way you're supposed to do it. Keep your stops loss low. Just real quick, I'm looking at NASDAQ. NASDAQ tends to go seasonal in the August and September timeframe with a little bit of a sideways move, and then tend to get a bid at the end of September. We'll see if that's the same way this year. Russell also tends to maybe get a little bit of a spurt into the mid part of September, then fall off a little bit. Traditionally of the indexes, the Russell typically has the largest Santa Claus rally of the other indexes. It typically beats them by 2 or 3%. So we'll be keeping our eye in that for our premium members. Lastly, hey, if you represent a trading group and need a speaker for your group, I can do customized meetings in person here in Hawaii, or if I'm on the mainland, if the schedule works out, or via webinar. I'll be glad to do that. We have a Bay Area Moneymakers meeting coming up in September. I know Steve and I will be working with the Honolulu IBD group going forward. So that's where we're working at. I'm working on this free webinar I'm going to provide to anybody who wants to sign up to it, but it's going to be by invitation, and it's going to be swing trade secrets. So, hey, let me help you find the basically the top 2% of great stocks every week. I encourage you to, do a couple of things for me. One, go to this website, and it's a free membership. You just sign up, and it gives you access to the 2 elite watch lists that I developed from the IBD watch list. But I do a lot of manipulation on them to come up so that the best of the best comes out. So I have taken the best and made it better. And just as a reminder, I was highlighted here in Amy Smith's book on how to make money trading stocks, success stories. And even Mr. O'Neill said Amy's book is a treasure trove of success stories. Each of these investors share what could help you find the top 2% of the individual stocks. So again, the other thing is on the YouTube channel. If you're on that, please subscribe to the YouTube channel. That's that big red button that says subscribe. And if you want a notification of when we're going to be presenting anything live, because I've really amped up what I'm providing free on the YouTube channel, just click the little bell. This is what my son tells me, and he's the tech genius. He says, click the little bell, and you'll actually get a notification to say, hey, we're either live or we just posted a new session. So, okay, well, hey, that does it for today. 2019 is a year of completion. keep the egg growing and trade wise and profitably. And for premium members, we'll be back up at the top of the hour. So with that, thank you very much. And Steve, thanks for joining us today.
Thank you.
Okay, God bless everybody. Aloha.
Take care. Bye-bye.